Hey, welcome back to Biz Talk TV. I'm your host, Michael Rager, the business guide. We're getting ready to go talk to Kristin Gunderson, our bookkeeping expert. She's going to talk a little bit about budgeting and why it's important to budget, not just personally, but for your business. Take it away, Kristin.
Thank you so much for having me on the Biz Talk Show. Again, I'm Kristin Gunderson with Gunderson's Bookkeeping. I am here to get all of your business and tax questions answered. So the question that we had for this week is on budgeting. Like what is budgeting? How do you budget and why is it important? So budgeting is basically, it's taking the time to sit down, analyzing your financials and figuring out how to project out what your income's going to be for a period of time, and then what expenses are going to be for that same period of time. And it could be you're doing it by year, by quarter, by month. Like right now, I recommend doing your budgeting for next year. And then I do break it down by per month. For that, I can look to see how I'm doing. Like the budget, like what I had budgeted for the, say last month, I can actually pull up my actual financials and see, am I in line with what I predicted I would do and what I actually did? And then being able to ask those hard questions of, if I thought, payroll was going to be X amount and we didn't make it, like maybe we went over, asking those hard questions of, well, why did we go over on payroll? Or why did we go over on office supplies? Or why didn't we hit our revenue predictions? And being able to ask those questions. And then we might be able to, it might be like, hey, we just overspent, like there was a lot of overtime that we weren't planning on when we did this budget. Or I had to order a whole bunch of office supplies I wasn't planning on, but we need them for the new year. Or maybe we didn't talk to enough people to reach our sales goals. But being able to have those hard conversations every single month when you're looking at the budget versus the actual to see how you did. So that is really important. And it's going to take a lot of time and effort. Like it takes a lot of attention to detail to be able to do these budgets. But once you have it in place, you'll be able to work with it, and it'll be worth your while to make sure that you've done it, right? So there's a few different types of budgets that we can talk about, or I want you to know about. One is there's the zero-based budget. What is it to keep the lights on? Like say COVID happens or something like that, and we want to just be able to, we don't need to make a profit. Like we just want to be able to make sure that we can pay our rent, keep the lights on, pay the employees. How much sales do we have to have in order to cover all of those expenses? That would be a zero-based budget. And sometimes we have to pivot and be able to do that just to be able to keep everyone employed. So that's a really important one. Other budgets would be the static budget. This is where you use last year's actual data by month in how much income you had and your expenses and your cost of goods sold by line item, and you either add a percentage or you deduct a percentage, and you'll be able to fill in those numbers for the rest of say next year. And so that is a static budget, and that's pretty easy to go off of. You can, like if you see your actual numbers and you want to be able to grow by 30% for next year, like you can just take that monthly and add 30%, and then you'll be able to get those. And then you can also kind of figure out, well, your expenses may not be 30% increase if you want your sales to go up 30%. Like there's certain numbers that are going to stay the same. Your rent's probably going to stay the same, or just maybe a 3 or 5% increase. Your payroll should go up a little bit, but not 30%. Some of those office supplies should stay pretty steady. So that would be working with a static budget, and those are the ones that I use the most. The next one would be a performance-based budget, and it emphasizes your cash flow per unit that you're selling. So if like you want to, maybe you have a goal in your company where you want to sell 100,000 units, you will know, well, this is how much revenue we should be bringing in if we have 100,000 units sold, and here's our overhead. Like we should be able to come up with a percentage of our overhead for that however many are sold, and how much the direct labor costs would be. So you can plug in the numbers based off of that, but it's based off of how many units that you actually want to sell of whatever your product or service is. The last one is activity-based budgeting. And this is where you start with your end goal of, hey, I want to have my 30% increase. And then you back into it all of the expenses that it should take into being able to reach that goal. So this one and the static-based budgeting I use a lot together, because I want to be able to use this budget to be able to reach the goals of the company, and then kind of using historical data plus how much it should cost to be able to reach those goals. So I kind of use them intermediately, like intertwined. So now that we talked a little bit about the different types of budgets, and you can kind of figure out which budget you want to use for your own business, like, why is budgeting important? Like, why do we need it? Like, it's going to take a lot of time, dedication to be able to get done, analyzing the numbers, being able to do the strategic thinking. So like, why is it important to get it done? Like, I know it's important, but why? So there's actually 5 different areas that it could come important for you to have this budget done. The first one is, it's going to ensure that you have the resources available for whatever you want to do. It could be you want to hire a new employee. Like, you need to be able to put that in the budget. Like, say you already have 4 employees, but you know you need to hire a 5th one. Like, how much is that going to be on a yearly basis, and break it down by month? And if your revenue goals are where they're at, like, will we be able to pay for this new employee? Because we have payroll taxes, we have insurance, we have workers' comp, all those numbers are going to go up. And probably you'd have to put in, well, maybe the person needs a computer, or like maybe that new hire will need a vehicle to be able to drive around. Like, you can put that stuff into the budget to figure out if you're on track for being able to hire that new person or not. Another thing is, I've worked with like fire departments, and they want to hire like apparatus, like fire trucks. Well, a fire truck costs like, I don't know, a few years ago it cost like $500,000, $300,000 to $500,000 for a fire truck. So if they need to buy like 3 of them in the next 5 years, you can maybe do a budget, not just for next year, but a 5-year out budget to figure out, what your tax dollars are going to be that you're coming in, because that's how the fire departments get paid, or by fundraising, how much fundraising they need to do in order to be able to pay for that new apparatus. So that's another reason why it's important. Like, you can figure out if you can afford what your goals are that you need to do for your company. The third one is it will actually help you set and report on internal goals. So like, that internal goal could be, we really need to hire a new person within the next year. It could be that we need to buy 5 fire trucks over the next 5 years, or we want to buy a company vehicle. Like, whatever those internal goals are, and it could be like, we want to increase our sales by 30% for the next year. Being able to see what those goals are and do the reporting so that you can see if you're reaching your goals or not. The third one is actually helps you prioritize your goals and what's important in the company. So you need to, whatever your goals are, you need to be able to go back to what your company values are, look to see what the return on investment's going to be if you do whatever you want to do. And it will just help you to prioritize, like, do we really need to hire a new person, or do we really need to hire that or buy that company vehicle? Like, do I need to hire someone first and then I need to buy the vehicle? So it'll help you prioritize, like, which ones can we actually do and afford to do, and what has a higher priority in the business. Like, we really need to hire the person before we buy the vehicle. But don't forget, like, if you hire someone, you might need to have the computer to go with it. So getting those things in the budget. I mean, the budget is something that should be played with, messed with. Like, once you have it, like, you need to be able to adjust it going forward to see, especially if you're not reaching your goals, or maybe your priorities and your goals change, like, you can adjust your budgets going in the future. The fourth reason is because it can lead to financing opportunities. So, but if you're going to be looking at an outside investor, like, it's really important for them to be able to see your budgets and your projections, like your past budgets, your current budget, and your future projections to make sure that, like, they're investing into a company that's stable. And it could be, like, for instance, like, say the company that needs to buy that new company vehicle or that $500,000 fire truck, like they need to be able to see, like they can't afford to buy it outright, but you know, there's going to be a debt payment that goes with that vehicle or fire truck, and they need to be able to see like there's actually money in the budget to be able to pay for this item that you're going to finance with them, so they can actually see like, yes, this is a good company, they have the money in their budget and they will be able to afford this vehicle or whatever they're buying, and they can afford the payments to pay it off, so we will go ahead and lend it to them. So that is another reason why it's important to have budgeting done. And the last reason is it provides you with a plan, and in case you need to pivot, like you may have your original budget going, but you know, say COVID happens again or something like that, where the economy shuts down, or say you get a new competitor in, or whatever the case is, like you know, say you're a restaurant and something bad happens with the health department, like you need to be able to pivot with that and be able to see like, what does a zero-based budget look like? Like I had goals of reaching 30% growth with my company, but you know what? We need to stop and reevaluate, and we just need to be able to keep the lights on. Like, what can we cut? Do we need to lay someone off? Like, be able to pivot, and having that budget and that starting budget and being able to reevaluate things within your business, I mean, that's a possibility. I mean, we don't want it to happen again, but I mean, we're not guaranteed anything. So those are all, like, that is everything on budgeting that I can talk about during this time. I hope that was helpful to you, and you know why budgeting is so important now. And if you have any questions on anything that I talked about today, go ahead and reach out to me. It is as simple as texting the word HELP to 855-798-3350, and basically it will text you back with schedule an appointment with Kristin. Or you can reach out to us on social media. We are on LinkedIn, Facebook, and Instagram. We're at Gunderson's Bookkeeping. So again, thank you for having me on the Biz Talk Show today.
Hey, thanks, Kristin. That was some great information. Really, that's just what we need to hear. Planning and budgeting is really what's going to help a business owner and just any family just make it to the next level. That's some great information. So we're going to be